Hello, it's Robert Miner with Dynamic Traders Group with this week's DT Trade Strategies for the week beginning January 11th. Again, Happy New Year. Boy, it's going to be an exciting and volatile January, if not all through the spring of this year. So really be prepared. We focus on trade strategies here. We don't forecast. We identify conditions with a high probability outcome and then a specific trade strategy to take advantage of those positions. If you like what you learn here, check out my book, High Probability Trading Strategies, and a full month of a DT report for a $19 trial fee. Check that out as well at dynamictraders.com. Okay, let's get started. The first thing I'm going to do is quickly review a couple markets we looked at last week. That's the Euro and the VXX. This is the VXX daily. It's volatility index. If you don't know what it represents, that's what Google's for and online searches are for, to get that information. We're looking at, it's in a position, and it has been for a couple weeks, to complete what might be a fairly significant low. The beauty of the VXX is that once it moves, it has fairly significant percentage moves, percentage change moves. So when we get near extremes, that's when we start taking a look at it for a potential trade strategy. Well, last week when we were looking at this, is you can review last week's, was basically if we made a close above 1743, that was a go long signal, because the weekly momentums were oversold or bearish, and that would have been following a daily momentum bear reversal, the third test of this level. And these are Bollinger Bands. They had been narrow for some time. The longer they're narrow and the longer the narrow ranges that we have, probably the more significant the breakout when it happens. That's fairly typical. Well, we made that breakout on, that would be Monday, with a close above the December 29th close. So that was a specific go long strategy, either on the close or looking for, that could be the setup to look for a higher close. For my purposes, that was a good go long strategy on that strong update. So remember, we're not forecasting, we're identifying trade setups with acceptable capital exposure. So if you went long on this day, under the assumption that we'd made a daily, if not a weekly low, where's your stop? Well, it's no further than below the low that was made prior to the entry to go long. And of course, last Friday, we just got stopped out. So that's the way it goes. Very minimal capital exposure, minimal loss that was taken. So that's why trade strategies are so important on every market. Don't forecast, identify trade setups that have acceptable capital exposure. Where are we at with the VXX? Well, we just got stopped out on Friday. I suspect within the next 2 or 3 days, we're going to have another go long setup, because all of the higher time frame technical conditions are the same as they were back here. It's just that we got a breakout, no follow through, got stopped out. We're probably going to have another setup here in the next 2 or 3 days. And particularly if it remains right in this area, can be a classic base building sort of area. If it's right around that area and we get another reversal, specific reversal signal, then we're going to take advantage of that in the days to come. Now let's do a quick review of the Euro, which was really featured last week. Nothing's really changed with the Euro. We're more than likely in a position to have completed a wave 5 high, multi-week high, if not multi-month high. So if you want the details, technical details of that, you can check out last week's video. That goes into much more detail. Here's the daily data for the Euro. And this would be as of the end of the week, not this last week, but the week before, after we had done that week's video. So the Euro did go up slightly to a new high last week, but then what has it done? And this is where the trade strategy comes in, is that then for the first time, it came down this past Friday and it took out this little minor swing low. Didn't close below the closing low, but it traded below it. That's what we call a pattern reversal signal. And that's a signal that says, okay, the euro has satisfied both the target zones in time and price. It's completed a pattern, and by having a pattern reversal signal, more than likely the higher time frame pattern is complete. Now we identify a very specific, in this case, go short setup. So that's why we wait and we don't forecast and say, well, it's made a top and we want to get short just because it hit some time and price targets. No, we identify that it's done that, and then we say, now, what can the market do to signal that indeed that's correct? Indeed, we've made a weekly reversal, wave 5 high. And as of just this past Friday, it did that. So the euro is now in an ideal position to formulate specific go short trades in the euro, go long trades on the dollar. We've looked at gold a lot in recent weeks, and let's do a little update on gold also, and why trade strategies are so important. Is that we had been looking at gold for potentially making at least a multi-week, if not a multi-month low here beginning in November. We had the ideal setup for a go long trade on this correction after what I got labeled a wave 1, and then the daily momentums had a bear trend, and then they made a bull reversal. So that was the setup to go long immediately. And in our trade alert reports, that's exactly what we did. So then the euro continued to advance as anticipated. And then into this past week, it reached time relationships for at least a daily high and potentially a weekly high right in the time zone. January 4th or 5th projected for the high, potential 5-wave advance. In silver, it's even more evident, a 5-wave advance. So we were looking at probably completing a daily high, which may be a weekly high. Here's our weekly data. And this is before this week was finished. The weekly momentums had reached overbought. So that's a warning that we're at or near a weekly high. And this past week was just a simple high to high to high. In other words, a time to be alert for a potential high. And recently we've had 9 weeks up, then we're 7 down, 7 up, and then 8 into this past week. So we're on the alert for a weekly high. So here's the trade strategy. Number one, when you trade, always trade in multiple units. That means whatever trade you have, you always consider at least 2 units. So you bring the stop very close to the market with 1 unit when even the lower time frame technical position gets in a place to make a reversal. And then you leave the stop in the second unit quite a ways away from the market in the event that the market continues after a normal correction to trade in the direction you're anticipating. So, and again, in our trade alerts, recommended half the position would be exited on a lower close as of Tuesday. So, of course, on Wednesday, we exited half the position for a modest profit, not a great profit, but from right around in here till here. So that was a pretty good profit. Whether you're trading futures or you're trading the GLD or whatever it is you happen to be trading. But the stop on the second unit is below this swing low. Now, if stopped out on the second unit, that's going to end up in a small loss. The profit is going to be slightly more than the loss, so it'll be a net profit. But the whole point is we're trading this in the event of a much higher time frame trend. So if that doesn't develop, getting out of the trade with a small profit at least is pretty good. That's how you're wrong about the probable longer term. And you still make at least a modest profit. So that's where trade strategies become critical, and why we always recommend that you trade in multiple units, a minimum of 2 units. I go into that in detail both in our tutorials that we have for our report subscribers, as well as my book, High Probability Trading Strategies. And that's what all successful traders do. They always leg into trades, they leg out to trades. And that's admitted admitting that you can't forecast the future, but you can identify high probability conditions, and then in the event you're wrong, you're still hopefully going to protect your position and even make a little money when you're wrong. So that's why trade strategies are so important. So that's it for today. Have a fantastic week. Be back with you next week. I hope if you like what you learned here, you'll check out my book, High Probability Trading Strategies, or a 1-month trial to one of our DT reports. Take care.